Aloha, ladies and gentlemen. It is day 8 out of 11 of the short strangle on FCX. Today is Tuesday, August 12th, 2025, 11:49 a.m. Hawaiian Standard Time. Let's go look at the fundamentals of FCX. Quick run through. FCX as a company, it is a copper miner. It's a copper miner. And as far as how profitable are they mining copper? Well, we see profit margin here. They are profitable. We would like to see this number bigger, but hey, it is profitable. Next number we're going to look at operating margin. Okay, that's pretty good. 25, almost 26 seems pretty healthy. And then it seems pretty healthy. That's great. So then we see we've got gross margin a little bit above that. Over here on these different performance things that are being measured, almost all green. Over 10 years, look at that, getting close to 300% performance improvement. So now, okay, so it seems like it's profitable. Seems like it's growing in profit. We know it's a copper. Is copper going out of? Is copper going to be not used anytime soon? No, it's going to continue to be used. Now let's look at those cash flows that the business is generating in relationship to the price it's currently trading at. Is it relatively a good deal if you're buying a business, not buying a stock, buying a business? Yes. Enterprise value over EBITDA under 10 starts being a good deal. We can take a look at the PEG ratio and see that even though it is above 1, it's pretty close to 1. Like when we're matching all these things together, average volume, when we start looking into, okay, this is a business that is good to own and it's profitable. But what about, can we cash flow it on options? We start looking at the volume. Average volume is almost 15 million. So yeah, we could probably do that. If it's optionable, we'll take a look to see if it is. And what about dividend? Okay, it's been growing its dividend for looks like the last 3 to 5 years, been growing, and it looks like it's about 60 cents a year, about a 1.42% yield, annual yield. And this is just really great because then we're going to look down over here at payout. About less than 50% of their income goes to paying this out. So they're giving investors a healthy reward, but at the same time, they're not compromising running the business and keeping the business profitable, things of that nature. It would probably be easy to maintain this. This is probably why they have been growing the dividend. It's probably because they've been profitable. They're profitable year after year. They're running a good business. Okay, so seems good, seems great. And then from there, we know there's some dividends, so there's a passive income there. And then let's look at our option chain. Option chain under trade. Well, you can see on looking at the option chain that I have a lot of orders in. These are orders because they say sell. And I have some positions and another order in. So let's look just in general at the option chain to see if is it a company that has a good option chain. And I'm going to just give you a hint. Yes, it is. That's why I'm using this stock. But how would we figure that out? Look, what's the volume? What's the open interest? What? How far can you go down the option chain and get paid at 5 delta um, per the expiration date? Can you get paid at 1 delta? Some stocks you can the option chain you can get paid at 1 delta. It might not be exciting, but if you start getting zeros at 10 delta, that means you don't even get a 5 delta. So the more money there is going down down here would be a better thing. So that's one thing to look at. And then overall, yes, it has a good option chain. That's why I'm selling all these different options. And let's look at the actual position that we have. So that's a bit of an overview of why am I choosing FCX. And then also as a player in this game, FCX having 500 shares of FCX would be a wise starting move. That would be a wiser starting move than a lot of different options out there. And when I say options, I'm specifically meaning different companies to put money into. Because now if we have 500 shares of FCX, then we can do things like this to more of an extreme. We sold one short call, right? That was naked at the time, and then we had two short puts that were cash covered. But if you remember earlier in this video series, I was explaining that I actually have cash to buy 100 shares of FCX to turn this naked position into a covered call. And actually, if you look right here where it says 100, see how it says 50 twice? I actually converted yesterday's naked call with a 44 strike price. I converted that into a covered call by adding 100 shares here, and now I have an order in to open another naked call. So if I have 100 shares, I'll sell a covered call and I'll sell a naked call as long as I have the cash to buy another 100 shares to cover this 45 if need be. And would I want to do that? Well, yes. As I was saying, that having 500 shares of FCX is that's a good place to start. That's better than a lot of other places to start. So I'm only at 100. So yeah, I would do this again and cover if need be. But what happens if this one I covered it into a covered call, but what happens if it expires below 44? Then that's okay because then I already started building. I have 100 shares out of a 500 share position that I want, so that's okay. And I got it at a good price, around 42. And when we look at the charts here, um, so we covered around here, and I decided to do that because look at how there's this big drop here. Now, each one of these is one day, but you got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading days. And where are we in relationship to this big drop down candle? Where are we? We're right back here, right back here. And if you look at the size of this candle, this one right here, and you look at the size of this candle right here, and look at the distance of where we are at about 42.71 in relationship to 44. So in relationship to the $44 strike price, like how it's not that far away. You can see how we have today's Tuesday, so we have Wednesday, Thursday, and Friday. 3 days of trading left. So if it's around this area in 3 days of trading, could it realistically get to around here? I think so. A way to measure it is we could measure the distance of these 3 days. These aren't like this is a big up day, which this one could have been, right? But it pulled back. Or we could measure this like gap one right here. These three. There's we can measure these three because they all went up. They've all been going up overall in 3 day increments. So over the next 3 days, I think it could head up there. But we could measure it with these drawing tools. We could measure this, let's say from about right here to about right there. And I get it. It's not perfect, but it's something for us to work with. So if this were to moving, continue moving up, even from where it closed today. Look at that, that puts us above 44. So I think covering covering the naked call and adjusting it into a cover call, I think was a wise move, given the fact that I want to acquire 100 shares, and I'm just in the beginning process of it. So, excuse me, 100 shares, 500 shares. I'm just in the beginning process of it. So now I got that. It allows me to sell another naked call. So now I'm selling two calls instead of just one going into next week. And my um, short puts look like they're just going to expire worthless here. We got about a 6% chance at 36. When I just bought 100 shares at 42 and I want to get to 500 shares, buying 100 shares at 36 and 38 seem like just such fantastic deals right now in relationship to the price I just paid. And isn't it amazing that, yes, I have a legal requirement that I have to buy 200 more shares if it drops below 36. I'll be buying 100 shares at 38 and 100 shares at 36. And I got paid. I got paid up front. I already have the money in my account. $8 for this contract, 35 for this one. So what if those expire worthless, which it looks like they will? If those expire worthless, that means then I brought in $35 on the biggest one times 100. It's 100 shares, so it brought in $35. But we're going to take out commissions and fees. So we're just dealing with one contract. It makes it easy for us. Take out 66 cents for commission and fees. All right. And then now we need to add in plus $8 here for the second put, plus $8 minus 60 cents, 66 cents of the $8 contract, 43 plus the short call, which was $10. So plus $10 minus the commissions and fees. So right now on FTX, we're looking at a $51.02 profit in what amount of time? In about a week. About a week. Looks like we opened up this position on the 6th of August, and now it's the 12th, so it's double the amount of days. About a week ago, and so let's say the total days. I remember it was 11 days to expiration, so 11, 12 days. It's roughly you're looking at around 2 weeks. Like once it's over one trading week, you might as well kind of look at it as 2 weeks. But on the shorter end of 2 weeks or on the longer end of 2 weeks, and this 11 days, it's like kind of around 2 weeks, and then it will it's going to expire. And I made around how much? Well, it's hard to see how much buying power it's tying up right now because I have all these orders. These are unfilled orders on FCX. Not really going to go into a lot of detail with them right now, but I will. I do bring that up so it makes sense of why this says split position on buying power effect. If it were the way to not have it be split position is to move all of these positions or these positions, move one to the other, have all the positions in one of these, and that will show you the buying power effect. But at this point, the next thing I would do is look at the buying power effect and look at and divide the amount of income that I'm making divided by the amount of buying power it is taking to make that income, to look at how profitable of a decision has this been? And if you think about that, you can literally do this in a way where you practice it a few times on paper trading. And before you do it with real money, you already understand how when you're going to do it with paper money, you're going to use the same at the beginning of the cycle, option opening the option position, and at the end of the option position, you're going to be using the same analytical metrics to decide whether it was a good decision or a bad decision. So from the very first day of placing the trade, you're already going to know this number. Now, granted, when with what I have going on here, it's more of like how much buying power is FCX taking in my portfolio, and that is ultimately the way you want to look at this is portfolio management. So why 500 shares of FCX for portfolio management? Because if you have 500 shares of FCX, and let's just use, you'd probably end up getting a better deal than this, but let's just keep things simple. 500 shares at we'll do the mark. Let's say somehow you were able to get a good deal. We'll just say 42 cents. 500 shares times 42 cents or $42 a share. So if you, whether it was in one buy or whether it was over 2 years, if you accumulated 500 shares of FCX, your net worth would be increased by or stabling out. You're building a base net worth of, at the moment, current market value of about $20,000. Now, if this isn't necessarily going to help pay your bills immediately, but it really does because of the options, because of the dividends, and because of how you can sell shares. But it's like anchoring your portfolio. That's the big thing. Is a lot of times people are thinking about trading something and they're not thinking about where are you trading that thing? Trading an option, trading a stock. Are you a day trader? Is this a good buy? What do you think about this stock? Those are all questions that are assuming that other questions have already been answered. So, for example, if a person is asking, what do you think about this stock? Um, what in what relationship to how much money do you have in your brokerage portfolio is this question relevant? It all ties down to that. So you have a certain amount of money in your brokerage account, and these different positions you are taking is going to affect that amount of money and your buying power. Where the amount of money you have, the amount of cash you have, is directly related to how much buying power you have. And with playing this game of a portfolio, the faster you effectively learn to use option buying power and stock buying power, then the better off you'll be. And it's just balancing these numbers. It's balancing the total cash with the option buying power, and if you're using stock with stock buying power, balancing your net liquidity and attempting to be overall profitable in a big picture. But for me personally, at this point in my life, even though, yes, sure, that's what I'm doing, I need to fund my life. So I am funding my life with the dividends. So something like FCX is probably not going to be my number one go-to dividend stock, but it is almost unsurpassed when it comes to filling the niche of what it does fill. This is such a perfect all-around portfolio stock. And here's why. Because copper mining is not going away. Copper being used in society is not going away. As long as humans are alive, copper will have importance and value. It is not fast or easy to create a copper mine, and not only do you have to know how to do it, you also have to work all the political red tape. So it is paperwork wise, production wise, it is not fast or easy, and it's very, very labor and financially consuming intensive. It is not an easy barrier to entry. It is a very high barrier to entry to start running a business like this. So just the fact that this company is in business gives it a bit of a moat. It's not the greatest moat. It's not completely, no one can penetrate it moat. But if you and I were going to start up a business, we probably don't have the starting capital or the skill or expertise to open up a mining company, or the know-how of how do you if you just stay in the U.S. still, what are the legal things you need to have done? So that it's a pretty big production, not easy for people to break into. This is the kind of stock that it has been in existence. When did this company start? They show a starting time in here. IPO'd 1995, so it was probably in existence before 95. You know, you're going back 95. It's like 20, getting close to like, oh, okay. Obviously, I'm not the greatest with the mental math stuff. So it's 2025 minus 1995. 30 years. It's been a publicly traded stock for 30 years. So it's probably been in existence longer than that. It's profitable. It's raising its dividends. Uh, this type of stock, you can own the stock, and you can use this type of stock when you're using a whole portfolio strategy, such as this type of way of using the stock. When you start using this stock this way, the reason why it's important to pull this up is so now you just kind of maintain it, make sure all right, as long as these numbers don't change too much in a negative manner, it's all good. And as we're getting closer to accumulating 500 shares, just make sure these numbers are good in that purchase price. That's fine. But once I have 500 shares, it's not like I'm going to keep looking at these numbers all the time. I need to be aware of them. It's like blood pressure and things like of that nature. Temperature of the body will make sure things are healthy. But we're already choosing a healthy stock to make that sort of monitoring a lot easier. We just wiped out million. I don't know if it's millions, but it's probably at least 100,000s. There's a lot of stocks out there, and we just sorted through them all. We picked one. It's a mammoth. It's a beast. It's going to be great for doing the wheel strategy. Something that's great for this stock is now I have these 100 shares around here. What if it it what if it trades up around this 44, but it looks like it's going to start reversing back? Well, I could sell those 100 shares that I bought at around 42, sell for about 44, and then just be back to that position of having no shares, but made a pretty good capital gain, and then just be ready to buy another 100 shares again while using the options, while getting the dividends, and it is just a real beautiful life in that realm, right? So we see this drop here. It's about halfway up there, and the $44 mark. Here's our box. We measured from here to here, and this box is a little bit bigger than that move, but it's something that we can work with. And yeah, it's even the Kona probability is telling us that is a reasonable um, number to statistically hit in this time frame on the 15th. So I think it's good to cover those shares. Now we turn that into a covered call position, and if we get called out, great. then not only will we make the money the from the short call, but we will also make the capital gain. So it's feels like a no lose situation to me at the moment. And if you construct your portfolio correctly, that's the thing. It's not the FCX is a no lose stock. It's not that. It's using a good player. Imagine it, we're playing not football, but we're playing a game like football. And the way we're scoring points is dollars that get added to our account. And when these are open, the play's still being ran, so we don't know what the end result's going to be until it's absolutely closed. But this is kind of the current score and what we can forecast where things might be in the future, right? So for that way, FCX is a great player to have on the board for you, but you have to appropriately position size it. If you only have $5,000, then maybe you're not gonna load up on on 500 shares of FCX, maybe 100 shares. With a $5,000 portfolio, having 100 shares of FCX would be, in my opinion, a smart move if you were going to play FCX the way I'm talking about playing it. So we have, and let's say you haven't bought 100 shares yet, but you could, like, you have the cash to do it. You could. You're starting to say, okay, all right, I get it. There's this way of I have 100 shares, and that's like starting to build a base on my big picture net worth. Boom, I got 100 shares of this. Now I get it, it's going to fluctuate on the value, but over time the stock market goes up, and it's just something established. So we're not worried as much about that number because we're going to end up adding, other numbers with it, but other numbers meaning you're going to add other stocks and things like that. But so you buy 100 shares, right? So you're establishing yourself on the board, and then from there, you're going to get dividends. Dividends, though, aren't really, it's just something to acknowledge. Yes, I'm going to get them, but it's not something to deal with right at this moment in this conversation because there's more than one thing you could do with them, and they're not like super big and they're not super often for this type of stock. What's going to be super often and super big for this type of stock is selling options. And so the option selling capability of the stock is phenomenal. And one reason why it's just a really liquid stock. The option chain can be pretty liquid. I'm not seeing, okay, like for example, in this one with only 3 days left, very, very liquid. So let's check the next one. 10 days out, fairly liquid. Right? We got 5,000 here, but we got numbers in all these categories. And so when we start seeing less numbers in these categories, like now we're starting to see the volume slow down, but probably as it goes closer to expiration it seems to pick up. But so this this stock overall, like playing the option chain, you notice here I have an order to sell something all the way out here in January of 2027. What is that? What am I doing with that? I'm not going to tell you exactly what it is right now, but I will tell you this. You want to know and you want to do it. So FCX will give you the ability to basically profit on all these different days to expiration. Now, if you have a $5,000 account, you're not going to be in the position with account size to be able to profit on all these right when you first start up. It'll take some time of learning how to do this. But this is kind of like driving a car. It's something that there's a lot of nuances to it. And when you drive a car, the road is not moving, but the people around you are. So there's things that are moving that you need to kind of keep track of in real time. There's people crossing the street, and there's them crossing the street in different manners on skateboards, on bicycles, walking, running. in a wheelchair. There's all these different ways that they might cross the street, and then there's different cars and trucks and motorcycles and SUVs and Jeeps and um, different size different sized vehicles, semi trailers and Suburbans and Tahoes. There's all these different sizes of vehicles on the road doing things that you're interacting with, and which one are you in? Of all those, which one are you in? And how are you interacting with all these different ones while the road isn't moving, but all these other things are, and you're trying to get from here to there. So that same complexity of all that stuff that it takes to drive and all these things that you're calculating, you didn't really have that ability the first week, probably not even the first year. It probably took years of driving to really put you into the driving phenomena you are at this current moment. So it's the same thing with this, is because there's all these moving pieces and certain things might not move. Like, for example, time doesn't change. That's one thing that is not going to, that component of trading in the stock market, that is your immovable thing. Is like, for driving, the earth doesn't move. So that's one thing that we're not using as a component into this. There's these other moving things. So what is the one thing that doesn't move in this with us? And that's the passage of time. That part you can 100% rely on. There's other things that are going to move, though, in relationship to the passage of time. Lots of other things. So you're looking at your trading portfolio, your life. You're here today, and then what is going on? There's going to be something going on in August, towards the end of August, or some later date that that you that you're going to be doing something. Like, maybe it just happens to be that you're getting married. That's pretty extreme, but that would be a nice, lovely, extreme thing to just randomly be doing while you're watching this video. So let's say that's what it is, getting married. And so there, every day these days pass by, right? The passage of time. And regardless of what happens, good or bad, in between these days, this event is going to happen here. And so that is kind of like, that is a good way to look at um, trading these different portfolio instruments, is that there's an expiration time, and let's say it's on this day, and regardless of what happens, the inner fluctuations of the daily movement of that option position might go up and down, but it's going to expire on this date. And so you're just watching what happens through. And because in the beginning you should be doing cash secured put options, when it expires, there's no way to get hurt. All that will happen, there's only two things that can happen, and only one will. One thing that could happen is your stock price could be lower than the strike price you chose at the beginning of the contract. So then what happens is that you keep the initial premium given to you. You keep that, which is nice. You got paid up front, and you kept that money. And now you exchange X amount of USD for 100 shares of whatever the stock is that you sold the option on, at the price that you sold the option on. You picked the price at the very beginning. You said, I want to buy this stock for this price. And wow, someone's willing to pay me $25 for me to buy the stock at this price. That's great. So I either buy the stock at a price that I want, and I get 25 bucks for doing it, or they decide they're not going to sell me the stock I want at the price that I want it for, and I just keep the 25 bucks for me just being available for them. It's really that great. So it doesn't matter. That's what's so great. You don't really have to worry about this type of strategy setup. But when you start doing stuff like this, when you start selling the naked options, in this case, it was a naked $44 call, and I converted it into a covered call. And the reason why I did that, right, is that there's about 3 more days left till expiration. 3 more actual trading days: Wednesday, Thursday, and Friday. And then in about 3 days, it's possible that it could get to the top of this trading range. So instead of stressing it, I just converted. I bought 100 shares around this price, around here. So if it does end up trading above 44, I will not only get to keep the money I was paid for the premium of selling it, which I think was $10, but I will make the difference of around $42 to 44. I will get a pretty good capital gain, and then that will happen. Wow, if the price is up there, then these are definitely expiring worthless, and I will look at what price do I want to resell at. And as a side note, see this big drop? What's happening here is telling us that this drop was not really that meaningful at the moment. This is what it's telling us. That might not be that meaningful because the market price is quickly getting back to the top of this big drop. And if it kind of gets to the top, back up here again around 44, it might be like $44 is a kind of like a $22 mark. Like that might be a price point to trade in increments of, because if it stabilizes around 44 and it kind of makes 44 a base, then 46 could easily be the next thing to like buy at 44 and sell at 46. It's a $2 profit, like $200 um, per 100 shares, and I don't think it's unreasonable. But what if it doesn't? That's the cool thing, is you just keep getting paid from every angle. So way longer than I really wanted this video to be, but hopefully it helps in the big picture of understanding like why build a position on FCX. You are doing this for a long-term trading vehicle that you will be able to trade probably the rest of your life, and you'll probably be able to pass it on to your heirs for them to trade the rest of their life, and they will continue to do the wheel strategy, to sell options on it and get paid dividends, get paid capital gains if they pick up the same thing, because more than likely FCX is going to be around longer than I am. All right, you guys have a good day.